We are awaiting a moment when everything changes, an anomaly, not business as usual, not a casual affair, not your normal day. It has to be a big event or it won't topple the markets. It must come as a surprise, leaving those who are unprepared picking up the crumbs that are left over. Are you ready? You came here for the truth, so let me unveil that for you. Today we're going to talk about Deutsche Bank. We're going to talk about the financial industry in general. I'm going to connect that in with the euro markets, going to look at the US dollar, so much more. Let's begin by taking a look back into the pages of history with the Lehman Brothers stock. You know what happened. You know the fate of the stock and how that triggered the financial crisis. We had Bear Stearns, we had Lehman, and then of course everything that followed after that. Today we have Deutsche Bank. Now this is a very big company. I would say it's much bigger, especially with derivatives exposure, than anything that's failed previously. Looking at this dipping below $10, we need to start getting concerned again. If we put these two on top of each other, we get something that is truly eerie. Now, of course, this is just a chart and you could make any chart look like this. Doesn't necessarily mean that Deutsche Bank is ready to fail in the next couple months. But it could happen. Certainly could. What I want to propose to you is that if Deutsche Bank fails, that this will, in fact, spark the financial crisis part 2. But that's a big if. You have the ECB printing up billions of dollars every single month and bailing out companies like Deutsche Bank, like other financial institutions. So why is it that this stock is still falling? Because real money moves out and fake money moves in. They're doing so in order to prop up the system. They know that it can't be sustained on its own. They print money. Lehman Brothers was a big corporation. It wasn't a mom and pop shop, and yet it failed. It's a complete failure. Bear Stearns, complete failure. And so many other financial institutions that may have been nationalized, may have been split apart and the assets were moved here or there. As far as I'm concerned, they've failed. They've completely collapsed and there's nothing left of them. So today we look at Deutsche Bank and I have to look at their derivatives exposure, because that is never, ever touched upon in the mainstream media and the financial media. You will not see it. If you talk to people in the industry, I once spoke to an individual, well, let's call him a wealth manager for a company that only deals with very high net worth clients, okay? You have to have multi-million dollars or else they won't talk to you. And I said, aren't you concerned about the derivatives? And he said, no, we don't touch any of that. And I knew right away that this individual knew nothing, because it's all tied together. Derivatives products, you don't need to directly be buying a derivative product, but understand how all markets are interconnected. Look at the subprime mortgages, how they were securitized, collateralized, and that caused a mess for everybody globally. But of course, they never invested in a derivative. This right here, you're looking at the S&P 500 showing you here basically the event, Bear Stearns and Lehman Brothers, and what happened afterwards. Throughout this period of time, look, everything was fine. The market's moving up and down, up and down. Hey, no worries. Some stocks are still going up. Throughout 2007, there was a few tech stocks that were definitely still doing well. And so we had 2008. Bear Stearns, everybody knows, then the markets start to get the jitters, start to go down. But hey, they got it under control. Markets start moving up. But then they realized the truth. And then Lehman Brothers and everything else that followed. And then the S&P went down to 666 in March of 2009. That was a very serious time. We thought everything was going to collapse in the world, the sky was going to fall, and so on. They passed the TARP bailout. They spent way more than what the bailout was for, which is quite unusual anyway. But this is an event that, like I said, throughout 2007, okay, so the market's moving up and down, no big deal, you know, a little problem in subprime, it's okay. We can deal with it. A lot of debt that people are carrying, we can deal with it. Commodity prices are rising, we can deal with it. And then suddenly, something happened. Bear Stearns, Lehman Brothers, you saw the derivatives starting to unravel. The whole financial system started shaking in its boots, wetting its pants, wetting the bed. And then stock market crashes to 666. And in order to get it to not go even further, they had to do TARP, they had to do cash for clunkers, they had to do all of the different, you know, silly programs that they set up. Then they had to have the Federal Reserve bail out not just companies in the US, but companies all over the world. Here, have some free money. And let's not tell anybody about it. Let's not put it on our books. QE 1, 2, and 3, Operation Twist. They started doing everything, you know, domestically, but that wouldn't stop it. They needed to have the whole world be bailed out. That was the reason why they really engaged in all of that $16 trillion bailout that went largely unnoticed and still does today. Looking in Europe, you find such a calamity that I don't know how this is all taking place today without the mainstream media pointing it out. We have negative interest rates on these bonds that are not, you know, maybe you could say, well, in Germany, if I invest there, I know it's safe, so I'll put my money there. If I get a negative return of a little bit, that's okay. At least my money is just parked there. It's safe. It's fine. But if you're looking at more risky countries, it suddenly doesn't make a single ounce of sense. Look at where this has gone. This is the Spain 2-year. And it actually, it's hard to tell, but this line over here, I know the font is small, so this line over here that I'm drawing represents essentially where it is, and that is actually slightly into the negative, okay? Just slightly under that zero line. You're going to get a negative yield on a 2-year piece of garbage debt. Who wants to buy this? Truly, who wants to buy this? Who wants to buy a 100-year bond coming, the century bond coming out of Argentina? I mean, it doesn't make any sense. No actual investor that has their own skin in the game would want that. Spain's 2-year yield, look at what happens right here. Dropping down into the negative territory. And then we have this, the CDS. CDS was very big last time around. It went largely silent throughout, you know, after post-financial crisis up until more recently. It did get some attention, you know, 2015, 2016, things got a little shaky there for just a couple minutes. These are all the different banks, whether we're looking at Deutsche Bank, JP Morgan, Citigroup, and so on. Things can become risky in an instant, and as a result, you have something like a CDS, which is there for companies to take advantage of, you know, let's just say, you know, certain happenings, whether it's a crash, whether it's a potential bankruptcy, whether it is, you know, chaos and so on. Watch out for the CDS. Watch out how they take advantage of these situations, okay? That's what happened with Greece. Deutsche Bank's new chief executive officer suffered a fresh setback in his efforts to reinvigorate Europe's largest investment bank as S&P Global Holdings cut the lender's credit rating. S&P reduced the rating by one notch to BBB+, the third lowest investment grade, citing significant execution risk after several management changes and strategy updates in the past years. Shares rebounded from a record low. Okay, it's still near record low. Let's not fool ourselves. All right. What we can see here is largely insignificant because of, you even saw the US getting downgraded and it's still considered to be a safe haven. It's not so important because look at what the rating agencies labeled subprime, CDOs, and all this garbage, AAA. So I don't value what the rating agencies put on a particular country or, their debt or anything, or so-called assets. It's insignificant to me, but the market prices it in accordingly. Okay, something to note. All right, just two more things. Want to cover the fact that the dollar has been rising here over the past month or so, month and a half. You'll see that as soon as the China easing starts, that's when it started to rise. Is it a coincidence? Perhaps, but just wanted to make note of that, as well as this. The euro here has been fluctuating. You can see that over the past, this is a 1 month chart. The trend is definitely downwards here, going closer and closer to parity. Whether it's going to end up there, I really don't know. I see weakness in the euro. I'm surprised that it has remained so high in such a time frame when ever since the euro, the sovereign debt crisis has been stirring things up. Still, the euro has remained rather high. It's surprising to me, but I'd like to know your thoughts as well on that. That's it for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So I do appreciate when you do that very much. Now, last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books at Amazon. Links are in the description below. Take care. As I finish this video, I'm thinking to myself something I was thinking about earlier today. What do we value exactly? When I look at my books, I think to myself, first book is 20 bucks, second book, 10 bucks. For $30, someone can get an education that is so helpful because they're not being taught it in school. They're not going to learn it from their friends, from their families, from their teachers. No way. It's not going to happen. And basically what I've done is I've taken everything I've learned and squeezed it down as much as I could, squeeze them down into 2 books. And yet, at some level, I feel almost a sense of guilt to tell people about it in my videos, particularly when individuals will, comment and they'll say, why you keep trying to sell your book and things. And this is the last time I'm ever going to be soft on talking about my books. This is so incredible. I've helped so many people, and I'm so grateful for all the people who have contacted me telling me that they've read my book and it's helped them very much. So that's it. I'm going to start telling more people about my book, and I'm not going to be apologetic about it. I know that these books are great, that for a total of $30, people are going to learn so much. They're going to get so much education out of it. And I'm confident about that. So I hope you'll support me on that. That's all for this video. Take care.